Hi there, welcome to Wyckoff Technical Analysis session for Litecoin. And these are the key takeaways if you're new to my sessions. And let's start with the weekly chart. So, 3 consecutive weeks of testing the yellow key level of $100. Litecoin got rejection from this yellow dash resistance line at around $106 around the middle of the week, and currently getting close in less than 6 hours, somewhere below 100. So that's the current situation. In terms of Wyckoff, we're still waiting to see whether Litecoin is going to get into a new accumulation cycle. So the current level, somewhere between $88 to $100, was where the previous preliminary support period was back in March this year. So not too far back in history. And as of this moment, it's still more likely for that to happen, heading towards an accumulation cycle compared to the upside showing us a second test. Because the rejection that happened this week, when we get to the daily chart, we can see a clearer picture of what actually that is. And given the tone of the macro, the bigger picture hasn't changed. Let's take a check on the Bollinger Band and kernel squeeze before we get into the daily chart. So the squeeze, this shade at the back, the indicator shows, is happening. And if you're new to this indicator, whenever a squeeze happens, what comes next is that there will be bigger price swings compared to the squeeze period, okay? So similar sense every time. And sometimes it swings to the downside first before going up, but sometimes swing to the upside first before going down. So the indicator can assist us to let us know bigger swing is coming, but it doesn't tell us which side it is to swing first. So be careful if you're new to this indicator, okay? Daily chart showing the same. A squeeze is going on. So that means a bigger price fluctuation is very near, at least from the daily perspective, okay? So, back to the Wyckoff stages in daily. So these are different from those in the weekly time frame. This horizontal period, the seemingly having higher lows that trends up slightly, is getting to a point where it hits the ceiling of this downward trend and also the yellow key level of $100. So that's where the dual resistance is. So for the past 6-7 days, it has been doing the same thing, retesting these two levels. And today it got rejected back to within the downward channel box, this narrower box over here. I'm just trying to see whether there's any room to adjust this box, because if that's where the boundary is, we should have that enclosed. So just to make sure the peaks of those candles are included. Yeah, that was like a, I'm not sure whether you can call that a fake boo or not. It's very interesting, but for the terminology or the methods I use, that wasn't a surprise for this to go outside of this downward trend, because right over there, back then it was a dual support, the yellow key level as well as the bottom edge of that uptrend. Only on the October 10th event, during that day, it has broken below that uptrend, and then the price of Litecoin continues to trade outside of that uptrend. Alright, so that was what happened. Not that something that's unexpected for it to go outside of the downtrend, because these channel boxes, the use of this is to show us where potentially the price will bounce. So if I change it to a line chart, it will be easy to explain. See here, it bounces close to the bottom. Likewise here, and these bounces are close to the ceiling of the box, of the channel box. You can say, or you can tell from the charts that these peaks aren't very close to the edges. Reason being, I switch it to a line chart. If I switch it to a candlestick chart, you see the wicks actually got very close to or even touching those edges. So that's why I say when it comes to this point, it bounces, that's normal, and it got rejected from the center line. So 3 lines of these channel boxes, the bottom, the ceiling, and the center line, are the lines that we have to pay attention to, because the prices will bounce along those area. Okay, that happens again, and again. All right. So that's the use of the boxes if you're new to this channel box concept. So where we are heading now, given that the price we're expecting it to bounce, supposedly there is a breakout opportunity when we get close to Saturday next week or coming, depending on which time zone you're in. All right. But the price did not stay, at least for now, is not within this triangle. It has gone below. Because if it trades here, it can have a chance to break out above the yellow key level. Not saying that it's over. In the next few days, it can climb back, and that's when it's got a chance to break outside of this downtrend. But still, the bottom edge of the previous ascending channel box will become the resistance for this climb. Okay, if it doesn't break out and really comes down like what it's doing now, again, it's not a surprise because we expect the price to bounce from the ceiling to somewhere like the center line or even the bottom edge of the box. And that's where the selling climax of the Wyckoff stage is. So it's sitting somewhere around the orange key level of $79. That's where the selling climax back in June was, and also the spring landed somewhere around the same level near the end of the same month during that time. And there were lower periods back in April as well, when the price first started to bounce off and form the upward channel. Okay, so that's the first level of more solid support. There's one intermediate support at that level at around $88. It has proven its existence on the 17th and then subsequently the 22nd. Alright, so right now, while we're saying the higher chance is to continue within this downward channel, heading towards somewhere close to the orange key level to show us a selling climax. Last time in June, it ended up somewhere higher than the $79. I'm just putting this tag somewhere around here, not saying it's going to go below the orange. So that's one thing. However, the upside for it to come to show a second test, meaning at least getting close to 116 green key level, is still it still exists, that chance. So the key is when it's going to break outside of this downward trend. I talk about this November 8th or November 7th dates. So it's only in a few days' time that there's one chance. And then eventually there's another chance when we get closer to early December. But that's still far down the timeline. So we have a couple of sessions coming up to cover. If this is really a new uptrend, then besides the November 7th and 8th, there's another 1 week later if the price still continues to trade within this wedge. Alright, if it's still trading within this wedge and hasn't break out or come below this white dash line, then by then there is another decision point for it to confirm whether it's going to continue with the downtrend within this channel box, or is it going to finish it and start another new trend somewhere along the yellow key level of $100. That's where Litecoin is at. And in terms of volume, that rejection over here on the 28th is pretty massive. So you see that long wick down back to below the yellow key level. So that's why since October 26th, right? 7 days, a full week, this yellow resistance as well as the ceiling of this downward channel box has been tested multiple times. And only yesterday it was successful in closing above the yellow, but still below the ceiling of this downward channel box. Okay, and that particular wick here is very indicative. The price got pushed up, and then very strong selling happened over there. You can tell from the volume bar as well. It's the highest among the last 10 days. So that's why I'm keeping this percentage for the time being until conditions change. Okay, so that's Litecoin is somewhere in between, like the mid-late stage of a distribution and a tendency to re-enter an accumulation. So let's keep an eye on and see how it's going to develop. Thanks for joining me today. See you in future sessions.